Here are some quick tips to help you remember when you debit your accounts and when you credit them. Recording a proper journal entry requires students to understand that all accounts can be debited or credited, and they need to understand when they should be debiting the account and when they should be crediting it. I'm going to give you a few different ways, and hopefully one of them will help you remember when you debit and when you credit certain accounts. In accounting, there are two rules that students learn immediately. The first, and it's rule number 1, it is the accounting equation. Assets equals liabilities plus owner's equity. It really doesn't matter what accounts change as long as assets is equal to liabilities plus owner's equity. So it's okay to have one asset increase and one asset decrease. You could have one asset increase and a liability increase. You can have a liability decrease and owner's equity increase. Any combination is possible as long as assets is equal to liabilities plus owner's equity. That's rule number 1. Rule number 2 is that debits equal credits. Not individually, but the total number of debits must equal the total number of credits. And while we're at it, we always make sure we put our debits before our credits. When we put these two main rules together, you end up with debits equal credits and assets equals liabilities plus owner's equity. Well, you can simply draw a line. Assets normally have debit accounts. Their balance is a debit. If you want to increase them, you're going to debit the asset to increase it. Liabilities and owner's equity have a credit balance. If you want to increase your liability, you're going to credit it. If you want to increase owner's equity, you're going to credit it. But there's a little hesitation because we've got an issue with owner's equity. We've got revenue and expenses, and they kind of offset each other. So it may help to expand the accounting equation even further. We need to remember that owner's equity has two pieces. It has the ownership piece and the income piece. It could have a loss as well, but right now we're just going to be positive as if it's net income. If you had a loss, you would do the exact opposite. And your net income is your revenue less your expenses. So if we expand owner's equity to include all of these components, we're going to have an expanded accounting equation. That equation is assets is equal to liabilities plus the ownership piece plus revenue and expenses. And by ownership, we're going to be talking about stock or a capital account if you haven't dealt with a common stock yet. This gets to be a little bit tricky because if we go back to our beginning thing of debits is equal to credits, we still have debits on the asset side. On the credit side, we still have liabilities, basic ownership, and revenue accounts. The problem comes in that you're subtracting out expenses. This is actually a true statement. If we consider that assets have a normal debit balance and we debit them to increase, we're correct. If we assume that liabilities and ownership, the ownership accounts and the revenue accounts have a credit balance and we credit them to increase, that is correct. If we remember this equation correctly, and we remember that it's minus expenses, then we have a moment to pause. And that moment should make us realize that a credit is going to decrease our expenses. That makes it also a correct statement. If a credit is going to decrease our expenses, then the opposite, or a debit, is going to be true. That works, and it's absolutely correct. Unfortunately, it's a little bit clunky for people to remember. So I'm going to give you 2 tips, and hopefully they'll help you remember more easily when you're going to debit and when you're going to credit your accounts. And remember, each account can be debited or credited. It all depends if we're going to increase that account or decrease that account. The first easy way to remember is dead coil. I wish I really knew who thought of this because I'd like to thank them and I'd like to give them the proper credit. But dead coil is an easy way to remember your debits and credits. Dead coil helps you remember what is normally a debit or credit and what we do to increase those accounts. In other words, the word dead means debit balances exist for expenses, assets, and dividends. When we want to increase expenses, assets, and dividends, we're going to debit them. The accounts with credit balances are the owner's equity accounts, the income accounts, and the liability accounts. So if we want to increase owner's equity, income, or liabilities, we're going to credit them. Obviously, the opposite is going to happen if we want to decrease. So if we're going to decrease an expense, asset, and dividends, we're going to have to do the opposite of debit and we're going to credit them. So dead coil helps you remember the normal balance and what you do to increase those accounts. This is a picture that hopefully will let you remember what you're going to do. Remember, debit means left. So if you look at your left hand and you make this symbol, the hang 10 symbol, you're going to look at which fingers point up as if they're increasing. So if you remember the accounting equation as well, assets are going to increase when you debit. And debit again means left. Liabilities, ownership accounts, and revenue accounts are all going to decrease when you debit. And your expenses are going to increase when you debit those accounts. Likewise, on your right hand, and right is what we mean by credit, really nothing else, the two fingers on the outside are actually pointing down now. So assets are going to decrease when you credit. Liabilities, ownership, and revenue are all going to increase when you credit. And expenses are going to decrease when you credit. So hopefully between the theory, between dead coil, and using your own hand, you'll be able to remember when you debit accounts and when you credit accounts.